Hello and welcome to tonight's webinar. And as I always start out, good morning, good afternoon, and good evening, depending on where you are around the world. We have a nice group of attendees tonight. As always, I'll check with Quinn to answer your questions. So please go ahead and type in your questions through the questions function. I'm just going to send out a message right now so that you can see that function is working. All right, now that we got that out of the way, my name is Brian Kahn. If you want any additional commentary that I provide, you can go to my website, jupiterpeakfinancial.com. You can see it there on the screen. Before we get into things, let's go through our disclaimer as we always do, since we are trading leveraged products, which can be dangerous if you don't have a plan, and that's what I'll stress whenever I'm talking to you, is always trading with a plan and a defined risk to reward. So I'll let this screen just be in front of you for just a couple of seconds here. All right, so an outline of where we're going this evening. A quarter three review. We'll talk about fundamental analysis and how important it is. And actually, not much has changed since we did the quarter two review and quarter three preview. So we'll talk about some of the similarities that are still carrying through. We'll go through the technical analysis as well, looking at major trends, support, and resistance. There have been some huge trends out there in the last quarter. And then we'll look ahead for a preview as far as quarter four goes, talking about what fundamental events may be big. A couple up there, election in the USD area, and then all those obviously also ongoing events over in Europe. And then we'll go into technical analysis and kind of see what we may be looking to happen as we do some forecasting into the next few months as we get into the year end. And this is an open discussion, so you guys can feel free to ask questions. This is a great webinar to go ahead and ask questions, so please do that throughout the broadcast. We'll talk a little bit about your opportunity as far as continued education, and then just a quick review. So fundamental review, what's been happening over the past 3 months? Well, weakening global data as far as economic data goes. We definitely are seeing weakening data in the USD, and that's definitely carrying over to other regions of the world. Basically, we've seen a pretty significant slowdown around the world since about May. So keep that in mind, that global growth has been slowing since April, May, all of June, July, August, and now into September. And we got some recent data today in the USD region, which I'll point out. But before we go into that economic calendar, obviously other events going on are all of the central bank statements, the ECB, the Federal Reserve, Bank of England, where they're constantly providing liquidity. And I put down there, it's working. It's working with an exclamation point, meaning it's working for the equity markets. What does that mean for you as a Forex trader? To me, it tells me a lot, and it gives me a lot of data as far as the frequency of trading and how big the moves are in the foreign currency markets and average trading ranges and things like that. And we'll talk about that when we see the charts. But the bottom line is this kind of gathering of central banks around the world, it is working as far as their what they're trying to get done as far as supporting the equity markets. And then I put in their SPX, which is an equity index, new bull run highs. So as of just a few days ago, we basically are making these new bull run highs in the last over the last 4 years. We're at our highest point that we've been. So leaving here, let's go to the economic calendar because I think it's important for you guys to see. So I'm just going to pause a moment while we move to the other applications that I have open here. So Forex Factory, there's a link to it directly from IBFX. There's also a link to it from my website. So you can get here quite easily. It's a great economic calendar. And today we had some economic data. Today in the United States, we had what we call big ticket items, capital spending through an economic number called durable goods. And that durable goods number is right here. Okay, and if you don't understand what durable goods what that means, then you click on this blue folder, and then you can go ahead and read what does it mean, why do traders care. So I like this right here. Why traders care. It's a leading indicator of production, rising purchase order signal that manufacturers will increase activity as they work to fill the orders. Manufacturers then need more help. They're online. There's more demand for energy and commodities and things like that. But this number has been going down over the past few months, so that you can see a history here of what they were expecting and what it actually came out as. So right here you can see negative 4.7 was expected. Before that they downgraded this one, so this was negative as well, and then this was a shockingly negative number. So big ticket items, capital spending was down and has been down month after month after month for the most part. All right, and that's in line with other data. We get some manufacturing data tomorrow in the form of CHIPM, Chicago Purchasing Manager. So now they're going to look at the Chicago region where there's lots of manufacturing in the United States. But all around the world, global growth has definitely been weakening. What fundamentally, now we understand the fundamentals behind that. So we're going to jump back into these slides. Okay. So fundamentally, we understand that economic data is weakening, but technically, here we are, new bull run highs. So now we can move into technical review. What's going on? Let's look at the macro trends on some of the major pairs. And any other pairs that you want to look at, go ahead and type those in. But before we do that, I want to go ahead and show you what the equity markets are doing and what volatility is doing. So again, I'm going to switch. I'm going to move over to the TradeStation platform. And we can see here, I'm going to pull up the SPY, and this is the past year. And again, percentage-wise, always thinking about percentages, we've gone from 110 last October up to basically 160 this October. So in that range. So there's 146. So 110 to 146 in the S&P. That would be 1100 to 1480. So a major, major move, hundreds and hundreds and hundreds of points up. And remember, I said that data really, really started to slow around the world in April. Well, April and May, here you are. Here's all of May, and the S&P lost ground. And as data has gotten worse in May and June and July and August and September, the S&P has gone from this point right here from about 127, 130, 135, 140, 145, 148, and again, this is just on a daily chart. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days ago, we were right up here at 148. Right now, we're at 145. So we're only 3 points or in the S&P ETF, or 30 points in the actual index, because this is 10% of the actual index. So 30 points from the high. So just a few percentage points from this bull run high that I've talked about. And again, if you want to see more data, you could go back and we could look at a weekly chart, and then you could see where we fell off in 2007, 8, and 9, and the recovery late 2009, all of 2010, all of 2011, and 2012. We've been going really steadily up, except for a couple hiccups, steadily up over the past 3.5 to 4 years. Equity markets are going to the moon. What does that mean for volatility? Because a lot of us are traders. A lot of you aren't just long-term traders, you're short-term traders. So what does that mean for volatility? Let's look at volatility over the past year. So this is actually a 5-year chart, so I'm going to bring this down, and we just want to see the past year. So since last October, volatility has dropped and dropped and dropped and dropped and dropped. And for some of you that like to use support and resistance, check out this level of support. So volatility, the VIX index, showing us basically what I call an opportunity index. The higher it is, the more opportunity, the more movement there is. Well, the lowest we've been is about 1350, and today at the end of the day we were at 15. So we're very, very close to the lows, but just if you like to trade off support and resistance, check this line out. Maybe you're interested the next time it comes down there in taking a peek at the VIX and going long, because that's where support has been. Obviously, as we always say, there are no guarantees. There's no buy, hold, or sell recommendations in this educational content tonight. Anything can happen. Trade appropriately for your trading size, your account size, and trade with stops and targets and have a predefined risk-to-reward ratio built in. But the 13.5 area has been, in the past, an area of support. That doesn't mean it will be in the future, but we're quite close to that level. Volatility is going down. What does that mean for us as Forex traders? So as I said, I want to look at some macro trends on some of the major pairs. Now that I have some background information of what volatility is doing, what equity markets are doing, let's go ahead and leave this slide where we're going to leave the slide of our technical review and actually go and now do the technical review just like we were doing on the equity markets. We're going to go and do them on the foreign currency markets. So we'll slide right here into the Interbank FX, IBFX MetaTrader 4 platform, and let's look at some long-term trends. Okay, here is the Great British Pound US dollar over the past year. So guess what it's doing over the past year? It's kind of in a nice big range. We've topped out about 162 here in October of 2011, topped out about 162.5 earlier this summer, and then equity markets fell off in April and May, and the pound fell off in May. And as the stock market climbed in June, July, August, September, the pound has gained ground in June, July, August, and September. The stock market is making new highs, and here we are right back at resistance in the pound. So it's obviously in a nice sideways trading area. I provide daily market commentary for IBFX almost every day, and I actually wrote about this chart here today that the stock market can't go down much, and every time it goes down, we have a day like today where it goes up big. So that's what the pound is doing, is it's kind of just going up, and then it has very, very small days down, but it's staying very close to its recent highs. So could this be a big move up, a small little consolidation, and then maybe another big move higher where it does break out above this 162, 163 area? To give you some perspective, check this out. If you like to trade in a range, look at this range that we've been in, 1.60, 3-ish on the top. Maybe you could round it to 1.65, and then down the bottom, except for just a little dip here, 1.53. So about 10 pennies worth, and that's been going on since 2009 and 2010 and 2011 and 2012. Definitely tighter and tighter and tighter in here. We're now at the upper range finally. What are we going to do as we get up towards this 163, 164, 165 area? Will we break out? But in the past, we've just stayed in this nice tight range, and we're at the top of that 10 penny range. Not so tight, but tighter compared to lots of volatility back in 2007, 8, and 9. So we have a 10 penny range. That's good for you guys to see and understand where we are in that big range. The euro, we know that everybody wants to talk about the euro. On a daily chart over the last, and some of these orders are in here, you can ignore them because they're some previous webinars and things like that. But we've had a little bit more movement. There's obviously a little bit more volatility going in the euro region than in the Great British region over in the pound. So that makes sense. We know what's going on over in the streets in Europe and unemployment rate and things like that. But hey, months and months ago, they're going, oh my God, the euro is going to disappear. The euro is going to disappear. The euro is going to disappear. And it did. It went down. It didn't disappear, but it did go down. It went 145. It started at 145 up here in the left corner and then dipped down. And so the past year, it's gotten weaker. Over the past 6 months, it definitely did weaken. But again, just like the pound strengthened, June, July, August, September, here we are bottoming out in July. August we go up, September go up, and we've had a huge September. It went 125, 126, 127, 128, 129, and here we are back at that upper range, and it kind of got rejected here where it went 132, 131, 130, 129. But again, if you do this Fibonacci, it's a strong move up. You can measure the move up and see that it only retraced back down about 23% or so. The less a move retraces, the better chance it has of continuing in its original direction. So we will see if there's enough strength to continue to carry the euro higher. So that's the long-term trends on the Great British Pound and the euro against the US dollar. We could take a look at a couple other currencies. The Aussie dollar on that same yearly time frame. The Aussie dollar, look at this big range, runs into resistance above parity at the 106, the 107 range, something like that. And it found support way down at the bottom. And I've got to pause because I got to move my moderator panel so I can see, because it's on the right side, so I can see my quotes here. Down around 95. So a big 10 penny range, just like Great British Pound US dollar, back and forth, back and forth. Again, global growth and slowdown. Are you seeing a pattern here? What happened in May in all of these pairs? The United States dollar strengthened against the Aussie. It strengthened against the euro. It strengthened against the Great British Pound. As the equity markets rebounded in July and August and September and October, going into October, so we're hitting there next week, what happened to the Aussie dollar? It strengthened, 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 strengthened. And it's kind of at the top of its range, and you see it's been rejected there. So there's some nice resistance points right there at 106 even, roughly. What's going to get it to get above there? What's going to cause prices to go? And this is where we can start to think about the future, and this is where we jump into our Q4 preview. So we'll jump back into these slides. So Q4 fundamental preview. Big elections coming up in about 5.5 weeks, 6 weeks for the presidential race over in the U.S. The Euro region, nonstop news coming out of it today, from on a daily basis. So who knows? Who knows what's going to happen over there? We know that there will be lots and lots of news. Continued QE, austerity, liquidity. If economic data continues to go poorly and weaken even more, are we going to see more from central banks around the world providing a boost to equity markets through liquidity or through low interest rates? If that's the case, a lot of interest rates around the world will drop, but obviously then you have to go and find out which economy is doing the best out of those. Right now, I think the U.S. economy is doing a little better than the European economy, but for whatever reason, the euro is gaining ground against the United States dollar. So you have to combine the fundamentals with technicals. That's what we're doing. Pay attention to ongoing economic data. Pay attention to ongoing announcements and interest rate changes around the world, around the globe. I put in here chasing performance and yield. I think a lot of you have been with me on webinars before. I don't just use Forex. I use Forex as a daily intramarket trade. I also use it as a hedge, and when I say hedge, I have to be careful here. I also manage portfolios and long-term retirement money equity portfolios, and as you saw, there are relationships between the equity market going one way and the United States going the U.S. dollar going one way. Not always, but sometimes it's there, and that's what traders do, is we build trading relationships together, and we try and create edges. So if in the past the United States dollar has strengthened when equity markets have weakened, if the equity markets get overbought and they start to roll over, will that strengthen the United States dollar in the future? Nobody knows, but those are the relationships that we're looking for, and that's what portfolio managers and hedge fund managers are looking to do, is they're looking to hedge a portfolio over here made up of equities using other markets such as options, using other markets, maybe commodities, using other markets such as foreign currencies. So lots and lots of people out there who want to be invested, they know they're not getting investments in fixed income, bonds. We know interest rates are so low. So they're in the stock market. If the stock market gets volatile, those people who maybe shouldn't be in that equity market because they might be older and they might need that money and there's no guarantees in any markets, you get a little bit more of a guarantee if you're in bonds and fixed income than you are if you're in the equity markets, because anything can happen at any time. So if it's not backed up by the government and things like that, like a government bond maybe. So as volatility comes into the markets, those people may get a little bit scared and they might start to sell, because now the markets aren't just going up, 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 up. They might be going down, 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 down. So right now people are chasing performance by being in the equity markets because they need the yield, they need the returns, and that's taking the equity markets higher and higher and higher. That might stop at some point, and so for those investors that might need to exit at some point, that might create some volatility. So until that happens, until the stock market changes technically and fundamentally, I think that we can see continued lower volatility. I showed you that VIX chart where the support is down around 13.5, and we're at about 14 right now. We're right on our lows. So I do see continued lower volatility until things start to get kind of wild out there and central banks maybe start to change their message. They start to talk about inflation, interest rates start to rise, equity markets start to roll over and go down. That will happen someday. It could be tomorrow, could be next month, could be next year. But until that happens, make sure that you're paying attention to what's going on in your trading market where you are. Moving into technicals. As I've mentioned, there's some great weakening in the euro-US dollar, even though, oh my goodness, the euro region. Well, we just watched the euro go from 1.20 up to 1.31, almost 1.32. So it went up 12 pennies in a very short period of time, in a few months, as the equity markets around the world have kind of stabilized and started to go up. So will there be a shining star? Which economy in this slowing growth around the world will be the strongest economy? And so right now, as far as the relationship goes, as all boats are rising, all equity markets are going up, the United States dollar is getting punished against most currencies out there. So in the past, the United States dollar has been a flight to quality, meaning where can you get your best quality? Right now, as the stock market's going up, your quality is not being in US dollar, it's being in other currencies. In the past, when the stock market has gone down, the best quality currency to be in has been the United States dollar, or at least that's been one of those currencies that you'd want to be in. So when volatility ensues someday, will there be a shining star? Which currency will be the go-to currency? That's what we'll be looking for. That's where people will be looking to say, I want to get out of the equity markets. Where can I get a return? And I can put my money over into bonds. I could put it into a currency. I could put it into a region of the world, whatever it may be. So will there be a shining star? Nobody knows, because a lot of the economies around the world, a lot of central banks around the world, they're going through the same thing. They're going through slowing data, and they're going through central bank easing, liquidity, austerity measures, quantitative easing. So technically, going forward, as I slide back into the charts here, I think you kind of get an idea of one that we didn't look at was oil, and this is kind of a fun one to look at. I've been writing about this on my daily market commentary on a pretty regular basis. Here's the United States dollar against the Canadian dollar. All right. As the equity market slumped, the United States dollar started to gain in value as oil prices started to go back down. But before that happened, here is when the equity market slumped in April and May. Here's the United States dollar climbing because oil prices dropped. And then all of a sudden in July and August and September, the equity markets went up. Oil went $80, $90, $100, $105, and the United States dollar dropped 104, one even at parity, and it went down to 99, 98, 97, 96. All of a sudden last week, the equity markets topped out and started to roll over. The oil markets went 105, or I'm sorry, they went up to about $100, 99, 98, 97, 96, 95, 94, 93, 92, 91, and the United States dollar strengthened a bit. But again, look at these retracements. We had a massive, massive move down and a very small retracement up. So what I'm seeing is if the equity markets continue to go higher, then you may very well see the United States dollar continue to go lower. That's been the relationship. That's what we're looking to see. So is this just what we call maybe a little dead cat bounce, and this bounce is maybe the rally in a downtrend that you want to sell? So a downtrend is made up of lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. Are the highs the ones that you want to get short at, and then it drops? It's high up here, you get short and it drops. Is this a high that you can start to get short at? Same thing in an uptrend. If you look at the euro, is this an uptrend? Every dip is to be bought. It dips, you buy it, it rallies. It dips, you buy it, it rallies. It dips, you buy it, it rallies. Is this a dip that can be bought? So that's what we're starting to look at, is if things continue the way they have been, will maybe those Forex pairs start to follow suit if the equity markets hang in there. Going back to the equity markets just so that you can see them, the stock market had a very, very small dip. These dips overall, this is a long-term chart, but let's shrink it down so we can just look at a one-year chart. Is this a dip that we can buy? There was a dip earlier in the summer, and then they bought it up. There's a dip right here, and it bought right back up. A dip right now, is this a dip, and we're going to start to rally back up? We don't know. The trend in the past has been up. We could maybe draw a trend line. Let's see if we can go ahead and put our drawing tool on here, and we can draw a trend line. Look at this line that's kind of acting as support, something like that. So are we sitting on support where this dip is now a buying opportunity, and any rally in the United States dollar is now a selling opportunity in the United States dollar? That's the relationship. So going forward, technically, we do have trends in place. We'll have to keep an eye on trends in various markets, though. It's not good enough just for the Forex markets. You have to keep an eye on other markets as well. Keep that in mind because they can help you to see if there's a relationship in place. All right. Just going back to one more currency, I just want to finish up with the Aussie dollar because these commodity currencies have been fun. I'll bring this back up so you can see it actually on a longer term chart so you can see this trend line. Look at this trend line here on the Aussie dollar. We bumped up to it just recently in early August, and then we bumped up to it again in early September. So there's some resistance there. What's going to get it to pop through there? The Aussie dollar is tied to gold. If we do more easing or if economic data weakens, will that get gold prices to go higher? Will that get the Aussie dollar to go higher? Well, it all depends on what's happening in each, economy and what those central banks are doing and what the, what's going on specific to that economy. But that's what you want to start to pay attention to. Maybe if you're trading this and looking for a breakout, if there's good economic data coming from the Aussie and there's bad economic data in the U.S., that might get it to pop because they might say, oh, they need to do more help in the U.S., but things are better in the Aussie region. They don't need to do as much, so that would keep their dollar stronger, and then people buy into the Aussie dollar, and it pops up. So keep an eye on that trend line in the Aussie dollar right around that 105, high 105, 106 area as it bumps up again, so that'll be a fun one to keep an eye on. So finishing up, your opportunity. You know that I do a lot of consulting at Jupiter Peak Financial. That's my email. If any of you are interested in the 30-minute interview via Skype or via mobile phone, I provide that free, no charge, no obligation. It's a chance for you to get kind of grounded and honed in on your individual situation. I do believe that you're the system. If you understand you as a system, meaning what is achievable for you, I do believe that you have a chance for success. If you just come in uneducated to the markets and guess and don't understand how many pips to risk and when you should be trading and what pairs you should be focusing on depending on where you are around the world, I do think that then you may be set up to have a tough time. So knowing about you and what's realistic for your situation and what you should be paying attention to and looking for that's realistic, that's really important for each individual. So if anyone wants any help, please let me know. You can email me at bcon1@gmail.com. To review, quarter 3 fundamentals and technicals, not much has changed since quarter 2/quarter 3, since that review and preview, which you can see there's a recorded version. We've got to pay attention to fundamental events. We've got to pay attention to central banks more so than ever. And then we've got to pay attention to multi-markets, various markets, equity markets, and commodity markets. And then we've got to look at Forex pairs, whether we're short-term traders or long-term traders, to see these setups, to see these trends in place. There have been some pretty big trends in place. We're at some resistance levels as we saw in the euro against the US dollar, the pound against the US dollar, the Aussie against the US dollar. What's going to get that trend to continue? What will the stock market do? What relationships will be there? Next webinar is in about 2 weeks. The main topic will be, I think I've changed it, so just keep an eye out. IBFX will send out an email to you, and you'll be able to see. So hopefully this was helpful tonight. But ongoing education going forward, you have the website IBFX where they provide a lot of information. I duplicate my Jupiter Peak Financial commentary over to the Daily Forex Trading Edge. I posted one there today. YouTube, there's about 30 videos now on the IBFX YouTube site, and then also the social trading site called IBFX Connect. Lots and lots of great information for you to be aware of. Let me go ahead and see if there's any questions. This recorded version will show up in a few days. Everything has to go through, I'm a consultant, everything has to go through compliance through IBFX's site there, and then it should be posted. So it is on their YouTube page, and you can see the link is right there. If you just go to YouTube and search for IBFX or Interbank FX videos there, it should come up. So look for it there in a few days as it goes through the system. So with the weekend, it may not be there till Monday, but it should go through there in the next 48 hours as far as business days go. So just give it a couple of days for that. Any other questions? I think you guys know how to get a hold of me. Please provide any feedback to me. Please provide feedback to IBFX so that we can make sure that we're answering questions that you need, providing content, providing educational material around what you're needed. So thank you very much for your attendance tonight. Hopefully this got you excited for the next few months ahead. I think there's going to be a lot of interesting news to come out. That should give us some interesting movement. But I just have to say that if things continue to get better and better and better in the equity markets for whatever reason, just be careful then what that's doing to volatility and what that's doing to the trading ranges. Overall, trading ranges have been muted in the Forex markets as equity markets go higher. So that doesn't mean that there's not opportunity. That just means you have to be realistic about how frequently you're trading and how long you're going to be in that trade as far as pips, and make sure that you're building realistic trading plans. So trading plans, I can't stress it enough. Happy trading, invest intelligently, and I'll hopefully be seeing you soon on daily market commentary posts as well as upcoming webinars. Thank you very much.